Hello and welcome to My Finance Teacher on YouTube. Today is 13th of April 2017, and today I would like to talk about gold in a really long-term perspective. In front of us is a chart of dollar index, the value of the US dollar, and the gold price over the last 50 years. The top part of this chart is the value of the US dollar. Now, dollar seems to have followed cycles where the dollar is dropping for about 10 years and then it's rising for about 5 years. Now, the cycle started in 1971 when the gold standard was abolished. Since then, the dollar has been decreasing for 10 years into early 1980s, and after that it has been increasing in its value into mid-1980s for about 5 years, as you see on the chart. After reaching the top, again it has been dropping for about 10 years into mid-90s, and after that it has been growing into early 2000s for another 5 years or so. And we've seen another bottom in the dollar value in around 2018. And since then, the dollar value has been growing. And this recent growth of the dollar value since around 2011 has been going on for over 6 years, for about 6 years already. So if this pattern with the dollar cycle continues, we might reach the top in the dollar index relatively soon. It could be a year, it could be 2 years, but it might come relatively soon. Now, what does it tell us about gold? Well, generally what we can see on this graph is on this long-term cycle, gold has been performing sort of inversely to the dollar. Sometimes, of course, this relationship didn't hold that strong. Now, between early 1970s and early 1980s, gold was generally increasing in its value, then decreasing when dollar was strong. This inverse relationship between the dollar value and gold price sort of weakened in 1980s and 1990s. In 1980s, when dollar was dropping, there was not that much change in the gold price, and in the second part of 1990s to early 2000s, when dollar was increasing in its value, again gold did decrease, gold price did go down, however not that considerably. Of course, the recent long-term cycle in gold has been more impressive. So in general, we do see this inverse relationship between the performance of the dollar and the gold price. If that continues, then again we might see a bottom in the gold price relatively soon, and we might expect gold price to start a new cycle where it will increase considerably and maybe even make higher highs compared to the all-time highs so far in 2011. Now, another interesting point to make here is that it is possible that this long-term cycle with the gold price has finished earlier than the top in the dollar index, and this bottom that we saw in December 2015 might be the end of this gold cycle and the start of a new one where we're entering the advancing phase of that gold cycle. So long term, I am bullish on gold, and it's also supported by this chart here. This is a monthly chart of gold price, and I think what is happening with gold over the last few months is it might be in this consolidation phase where it's getting ready for a rocket launch up. This consolidation seems to be in the shape of a triangle. It's sort of a triangle, as you see on the chart. The upper boundary of this triangle might either be this downtrend line from the previous gold cycle, or another possibility for this upper bound for this consolidation triangle is the downtrend line of this long-term gold cycle that has been going on since early 2000s and until now. Now this downtrend line might be another upper boundary, possible upper boundary for this consolidation phase, and the lower boundary might be this trend line connecting the previous two cycle lows of the gold price. So in long term, as I said, I am optimistic of the gold price, although within the short term it might come down a little bit to tag this upward trend line, the lower boundary of this consolidation phase. Now, to support the long-term perspective, let's have a look at another chart, similar one. Again, this is a monthly chart, and this is our recent long-term cycle in gold. Again, to remind you, that has been going on since early 2000s until probably the end of 2015. And the rally that we have experienced during this cycle has been retraced back somewhat, and the amount of the retracement that we've experienced is around 50%. And as we know, 50% Fibonacci retracement number is often a strong support zone or a resistance zone. In this case, we're approaching this level from the top, so it could prove to be a strong support zone. Additionally, we have not revisited this number for nearly a year and a half, which increases the likelihood that we will not come back to those levels. Those are the price levels of around $1,070 per ounce of gold. This also, the fact that we have not revisited those price levels, also supports the idea that in the long term, gold looks promising. Now, moving on to the short-term perspective. Yesterday, gold broke up through this downtrend line from the previous gold cycle, and it is interesting. However, as I mentioned, I think gold is now in the phase of some consolidation before it can shoot upwards over the longer term. And we are now approaching the time when we should really enter this declining phase of the gold cycle. I'm talking about the half-a-year cycle. Another indicator pointing to that possibility, the possibility of entering the declining phase of this half-a-year gold cycle, is that the RSI has reached overbought levels, and this level of RSI has not been reached so far during this gold cycle since December last year. So to sum up, over the short term, I expect gold price to go down for a few weeks and reach this strong support level of about 1200, bounce up from that since it is a support zone, and continue down into the end of the cycle, probably sometime in early summer. However, in the long term, gold does look promising, and I do wish you luck with your investments, although this is not an investment advice. If you like this analysis, consider subscribing to the channel and hitting like under the video. Thank you for your attention.